Well, you have to ask, what tools do they have left? Um, Really, the only thing that they're going to be able to, the only thing they'll be able to do is to continue to print. Um, my partner Jim coined the phrase QE to infinity back in, I think, 2009, right after the first QE started. Once they started up, he said there's no way they can stop. And that fits in with Richard Russell's inflate or die. You can never deflate the system. You can't do that because what would happen is you'd have a deflationary push where the Fed would not be able to save things. They'd be basically pushing on a string. So the Fed at this point has been jawboning, and we've seen the absolute, I think it's the worst January since 1920 for the stock market. And that's just based on the Fed jawboning. I mean, they're still in there with QE. Now, they said yesterday that they're going to end QE in March, and from that point forward, they're going to start to shrink their balance sheet. And I'm going to tell you that's a mathematical impossibility. Mm-hmm. If they actually do shrink their balance sheet, what they will do is they will collapse the entire credit facade, edifice, whatever you want to call it. The entire credit structure will come down because, well, think about this. Since 2008, what's been going on? There's been nothing but life support for the financial system for the last 14 years now. This is a patient that cannot survive, cannot live without the life support.
Something that a lot of people in the precious metals community are sort of stunned by, that the Fed is doing this and no one really believes the taper is going to work. No one believes they're actually going to be able to raise rates. And then about a week or two ago, they started saying also shrink the balance sheet also, which means not only stopping the taper, but selling bonds too. And just the concept, it sounds so preposterous to a lot of us, the concept of doing all three. But at the same time, the mainstream business news media, Fox Business or CNBC, they're both doing it. They take this seriously. And I mean, do you believe any of these narratives anymore with the mainstream media? Let's call it the business news.
It's no longer their job to question it. It's their job to be a cheerleader. They've been cheerleaders. CNBC and FNN back in the 90s, that basically has been their job all along, is to be a cheerleader. We're living in a world where everything's upside down and nothing makes sense. How could a used car be worth? I mean, I saw in their dealership a Ford Bronco that had it only had 500 miles on it. They put it right on the middle of the showroom floor. It sold originally for $66,000. The guy turned it in, flipped it for some type of profit. Now they're selling it for $91,000. That's insane.
That's nuts.
I mean, we live in an insane world. Just take it one step further. You got gold and silver that cannot default in a world that's going to completely default. And they're being pressured by paper contracts. Nothing makes any sense whatsoever.
I think people are going to be shocked by the debt defaults that are coming, the debt cycle that's coming. With the rising of interest rates, I think
Absolutely.
they are going to try to raise interest rates. I think the political pressure from Congress on inflation, they're going to try and try to see if they can do it without blowing shit up. But I think shit's going to blow up at some point. I don't know if it's in March, but because of the end of the taper, or if it's going to need a couple of rate hikes before it happens. But I don't think there's a chance in hell it's going to last until they actually reduce the balance sheet. But I mean, do you have any thoughts on? I'm sure you do. That's why we bring you on. What's your thoughts on when? What's the point where this fails?
Well, let me ask you a question.
I asked the question here, Bill. Go ahead.
No, let me ask you a question. If they're being, we're hearing on the business channels, we're hearing across the board, the Fed's going to raise rates, blah, blah, blah. maybe that's the plan, is to blow the system up.
Mhm.
I mean, I've said all along, when everything is said and done, they're going to have to kick the table over. And my number one pick for kicking the table over would be going through with what the practice or dry run was back in October with a cyber attack.
Mhm.
What does that do? That burns the restaurant down and gets rid of all the evidence.
Mm-hmm.
You know, that's really interesting because I think the Fed has already said they can't do a central bank digital currency without approval from Congress. And I don't think they almost need a crisis to force some of that stuff through, don't they? They need shit to blow up.
Absolutely.
They need to create the next crisis. So remember TARP, the TARP bill back in 2008? Initially it failed. It was voted down by Congress. And then they dialed
700 billion.
Yeah, they dialed up the pressure.
We're all going to die unless you vote yes.
Yeah, stock market tanks 500 points or whatever it was, and so hey, tell Congress to go vote again until they get it right. That's what I think one of those Summers or Larry Summers or one of those guys said at the time. And,
well, Jim, go back 2 years. Just over 2 years ago, we had the repo crisis in I think it was September 18th of 2019. Where the Fed had to step up every night and put $100 billion into the overnight system to to keep rates from going back to 10%, which is where they went overnight. And then COVID came along.
Mm-hmm.
Was that not convenient?
Yeah, it was.
I mean, COVID slowed down the demand. COVID created less demand for credit. So it was a pressure valve, whatever you want to call it. It was like GLD was for gold back in 2004, 2005. It diverted capital from real gold to paper or whatever.
You know, I want to change the subject a little to something else that's big in the news, supply chains. There's a lot of truckers making a lot of news up in Canada. And I know that supply chain issues have been a hot topic for you. What's your take on that? What's going on in Canada? And a lot of U.S. truckers are going who are crossing the border to support their fellow truckers in Canada.
Well, that's a huge topic. There's going to be a lot of building goods that don't make it south from Canada to the U.S. But more importantly, Canada gets almost their entire food supply from the U.S. So, I mean, I haven't seen it. Ivan, you live in Canada. I would imagine the shelves are already starting to get bare, and you're seeing that in the U.S. I mean, I was just at the grocery store this morning, and there's several types of goods that the shelves are empty. And what's happening now is they're not getting resupplied in Canada. I would imagine within the next week or two, you're going to have a lot of really pissed off Canadians because they can't get food. And I've said this for a long time. Every day that you wake up, we're only 72 hours away from anarchy. And the reason being, that's basically how much grocery stores have on hand is 3 days worth of food. And that's just about the amount of time that a human stomach can last without food, without the person becoming irate.
Mm-hmm.
Yeah. Well, a lot of people don't realize grocery stores don't have big storage shelves in the back. It's like everything that they have is out there on the shelves for customers. It's like it comes in from the trucks, immediately goes out for customers. There's no huge back room in these places, right? So if the trucks aren't making their deliveries,
called just-in-time inventory.
Exactly. If the trucks aren't making, and the same goes, what do we import from, we send a lot of food north to Canada, which probably is happening to a lesser degree now. But what do we bring in from Canada? What do we import from Canada? Tons of lumber, I'm sure, for the construction industry.
Building supplies.
Lots of those types of commodities come south to us, which are not happening. Probably, I mean, some are probably still coming, but not in I know the auto parts industry, supplying all these auto factories. That's a huge business coming from north of the border down to us.
Hey, I got another question for you, Jim. How is it possible that these automakers look at the stocks, Toyota, Ford, General Motors? How is it possible that these automakers' stocks are trading close to their 52-week highs at least above the mid-range, but yet they're not selling any cars. I mean, go to any car dealer and they've got, 12 cars, 18 cars, and in the past they had 300 of them. So
That's right.
how is it that these stocks are pushing, how are these stocks bid?
Yeah, I mean that's hey, when the Fed prints crazy amounts of dollars and puts it into the system, and weird things
It's got
start
to go
happening.
somewhere.
It's got to go somewhere, so it's going to speculation. Does it make sense to buy bonds? I mean, are you going to buy bonds at 1.7, 1.8%? A 10-year bond?
Let me be Jim Cramer. You're an idiot.
Yeah, I'm an idiot. I'm not buying a one. I'm not buying.
How could you lend your money on a 10-year bond at 1.8% or a 30-year bond at whatever it is, 2.25%?
Yeah.
And inflation that they're telling you is 7%. But the real inflation, if you look at John Williams, is 15%. So you're locking in absolutely huge losses year after year. You're an idiot if you buy bonds.
Yeah, I mean it's a big question. It's a big question. Hey, let's turn the discussion to our favorite subject, silver. And our audience is probably not happy today because it's getting hammered again. They're doing that little tamp down thing. So why does silver have this huge albatross around its neck, Bill? Why aren't we? You would think it just listening to the macro news out there with high inflation, a lot of instability in the world, gold and silver should be launching. Why do they have this albatross around their neck?
Well, let me put it this way: silver is the fuse, if you will. And actually, there was an article out yesterday by Sprott Money that showed the GDX chart and the silver chart. So that's miners and silver have been in absolute lockstep for at least the last 5 years. The reason they cannot let either miners or silver run loose and go to a true clearing price, which is probably many, many multiples above where we are now, is if either the miners or silver took off, then you start to get serious, and there's already serious bids under the cash market, but you'd have speculators running to gold.
Mm-hmm.
And if you had gold at, even today, let's say you had gold at $2,500 or $3,000, that would certainly be calling into question the veracity of the dollar, which leads to the next step, and the most important step is then it brings into the question the ability of the U.S. Treasury to borrow. And that's what it's all about. The entire world runs on credit, and the biggest debtor in the world is the U.S. Treasury. So if you put a roadblock or a bump in the road or whatever for the U.S. Treasury to borrow, basically you're shutting down the entire credit market. And silver is the fuse. You couldn't have silver go to $300 and gold stay where it is. There's no way.
Yeah.
So they have to keep any and all excitement away from the miners and silver. And the reason being, when these things run, and you've seen it in the past, when miners run, when silver runs, they make huge percentage runs.
Mm-hmm.
So they cannot allow those two out of the box, because then it infects gold. You'll get more speculation into gold, and that calls into question the dollar and thus the ability to borrow.
Wow.
Well, I already know what the comments in this video are going to say, and they're going to say, why should anyone be buying silver and gold in such a manipulated market, right? It's going to be like,
because you're getting it at a huge discount.
Yeah, exactly.
I mean, think about it.
Yeah,
that's the answer. First off, you're getting it at a huge discount, and gold and silver are the only two monies on the planet that cannot bankrupt in a world that's going to completely bankrupt.
Yeah,
that's true.
You're going to have credit capital that's just fleeing left and right out of fear of bankruptcy, out of fear of default, and they're going to gravitate back to gold and silver because they're the only monies. They're really the only asset on the planet that can't default.
So a lot of people say, all right, when? I've been hearing this for 10 years, right? I've been waiting 10 years, Bill. I've been waiting 10 years. That's what I always read in the comments. And, do we just got to tell people, just enjoy the discount that you're getting now? Enjoy the manipulation that's subsidizing it to the lower prices. Keep building your stack while you can, because once this opportunity's gone,
It's over.
once it launches, physical is going to disappear within a weekend, right? When it takes off.
Yeah, it becomes unobtainium.
Yeah.
That'll be the new symbol for it.
Yeah.
And actually, to answer that type of troll comment, they're asking when. And I would say pretty much open your eyes. It's happening right before your eyes. Because going back to the narratives, everything that they're telling you is bullshit. If the media tells you something, like 90+% of the time, it's wrong.
Mhm.
And if you get censored, basically 100% of the time, you're right. So if everything is bullshit, why is the current supposed price of gold and silver, why is that true?
We're a couple of bulls here. Ivan and I are a couple of amateur hacks on YouTube, and we're bullish all the time on silver and gold and the mining stocks. And but at the same time, I have this creep of doubt just seeps into all of us, even the most optimistic characters like Ivan and me. This creep of doubt is, and I haven't been at it for 10 years like guys, or 20, 30 years like some of you guys. I only really got into, the precious metals trade a little over, I think it was March of, I had mining stocks before that, but I really became heavily invested in it in March of 2020 when the Fed went to 0% and launched QE Infinity again. So let's call it a year and 10 months ago.
Mm-hmm.
That's what it's like, all right, it's happening now again. They're at 0% again. But it's like, all right, it's been almost 2 years. And we had a good run in 2020, but 2021 felt like a wasted year for most of us, right?
Right, but understand that this is, at this point, this is no longer Bill Holter's opinion or somebody else's opinion. This is pure math at this point.
Mm-hmm.
I mean, without a doubt, the Fed has got to continue to print. I saw a statistic that shocked me to the core. I knew it was a big number. I had no idea. But in the last 2 years, if you look at M1 money supply, it's quintupled.
Yeah.
So 80% of all dollars outstanding today have been created in the last 2 years.
Yeah.
Really?
Yeah.
So, Jim, at this point, it's pure math. This is not an opinion. All you have to do is look at the math, and it tells you where this thing goes.
Yeah, I hear you. I mean, I'm a firm believer that eventually this is going to break, and what we're choosing as our safety net, buying physical, is the proper step to be taking long term. But it's just dealing with the data. Ivan and I are on Reddit, and we're on Twitter, and we're on these platforms. So we hear the whining a lot. You know what I mean? We hear it a lot.
Well, you're saying long term. The bottom line is we live in the most indebted financial system in the history of history. No matter how you look at it, no matter what ratio you look at, debt to GDP, debt to cash flow, debt to anything is higher today than it has ever been in all of history. And at the same time, the Fed is telling you, well, we're going to raise interest rates to cool the economy down and slow inflation. Well, no, you're not going to do that. You're going to raise interest rates and you're going to blow the debt bubble to pieces. It's math. When you blow the debt bubble to pieces, everything defaults. It will be one huge chain of defaults, and the only things that can't default are gold and silver. That's why you own gold and silver, to preserve your wealth, not to, quote, make money.
The that default cycle, what a lot of people don't realize is a lot of these hedge funds and banks, it's counterparty risk. Someone's on the other side of every trade, right?
Exactly. Yes.
And when the interest rates start changing dramatically, there's tons of derivatives, there's tons of credit default swaps that start changing dramatically in value. So someone's losing money when these big moves happen. And when
every time somebody wins, somebody loses.
Yeah. And what happened in 2008, certain hedge funds started blowing up because they were on the wrong side of these trades. And then it became a counterparty risk issue. Then Bear Stearns blows up, then gets bailed out. Then Lehman Brothers blows up.
Right.
And so we're watching for that right now, right? That's when the crisis begins, when someone fails and we start having bailouts, right?
Right.
Yeah,
well, one other thing, the real world, you're talking about the financial world. If you talk about the real world, and I've used this analogy probably 100 times, how many uses of credit do you think there are in a loaf of bread? I mean, I could name 8 or 10. So if any of those uses of credit become unavailable, so does the loaf of bread.
Oh, you mean
it's the bread, it's your green beans. Right. The whole supply chain is supported by credit, is my point.
Yeah.
Every movement of the product that you get at the grocery store, I mean, the fertilizer, the seed, harvesting, going to silos.
Yeah, that's right.
I mean, that's only like the first 1/3. Then you got the processors, you've got truckers in between, and it goes to the, finally goes to the grocery store, and probably 20% or more buy groceries with their credit card. So, I mean, the product won't exist, and the ability to purchase won't exist, because if credit fails, so does your bank.
Yeah.
Wow.
That is so true. So true. Well, Bill, thank you very much for joining us today. We really enjoyed talking to you. The audience enjoys hearing from you. You're a wealth of knowledge and experience, and we'll definitely do it again in the next 2 or 3 months as the year develops.